So at this point, we are going to go ahead and start recording this meeting. So please do be mindful. We have you muted as you enter. Please just be mindful of whether or not you unmute. If you could please sign in with your name and school or district in the chat if you have not already. And that is the first step in getting you the clock hours you deserve for being here. And Linda, our amazing program specialist, is going to share a few more details on these housekeeping items. Linda?
Thank you. So everybody will have the opportunity to get 1.5 clock hours for this workshop. And I have anyone who signed up through Alchemer or Survey Gizmo, I have automatically loaded you into PD Enroller. So once this is over tomorrow, the next day, we'll go in and take attendance, and then you will be prompted by PD Enroller to take the evaluation, and then we'll see those automatically in your transcripts in PD Enroller. And then we are going to load the YouTube video, the link to the YouTube video and any resources into the attendee page of PD Enroller, and you'll also be able to access those at that location.
Thank you so much. I have also dropped our YouTube, FEPPP YouTube webpage link in the chat. I saw a question from Mike on where we can view the recordings of the sessions we missed, and that is where Linda has uploaded all of those for you. All right, we have an amazing webinar for you today, but as always, we are going to start with our land acknowledgement. This beautiful map from native-land.ca, acknowledging that our homes are on native land. As always, I am joining you from Spokane, Washington, so I will be reading from a land acknowledgement used by the Spokane City Council. If you would like to drop in the chat where you're joining us from, we always love to know where people are coming from around our beautiful state. We acknowledge that we are on the unceded lands of the Spokane people, and that these lands were once the major trading center for the Spokanes, as they shared this place and welcomed other area tribes through their relations, history, trade, and ceremony. We also want to acknowledge that the land holds the spirit of the place through its knowledge, culture, and all the original peoples since time immemorial. All right, and this is the part where I give a brief introduction to the Financial Education Public-Private Partnership, or FEPPP. We were formed in 2004 by legislative mandate, which is kind of amazing that the Washington State Legislature has for 20 years been putting time and energy into K-12 financial education in our public schools. We have two main responsibilities. First is reviewing financial education instructional materials and making sure those are accessible on our website. We also provide professional development and training, like the one that you're participating in now, at no cost. If you are interested, we also have an exciting grant opportunity that is entering its second year. For more details on that, I would encourage you to visit our website, www.fepp.org. And what are we going to go talk about today? Today, we are going to be examining the challenges and barriers that are faced by the unbanked and underbanked here in Washington, and how we can connect our communities with financial services that promote financial inclusion for all, including our most vulnerable student populations. We have some really amazing guest speakers today, so I want to jump in as quickly as possible to make sure that we have time for all of their amazing insights, as well as questions and answers at the end of the session. So we'll start with me. Hello, my name is Amy Kleber. I serve as the elementary program supervisor at the Financial Education Public-Private Partnership. I have for the last year and a half. And I have a unique perspective on this specific topic when we're talking about getting banked. My mom actually worked in banking for years. She worked for Washington Trust Bank. So the only take your kid to work days that I ever remember attending were at a bank, because my dad was a teacher, and that did not feel like an interesting thing to me to go to school with my dad, right? So I have always been exposed to banking and financial institutions. So when we're talking about this topic, I really wanted to make sure to bring in voices that had a different lived experience than me, because I know that I am not, that's not the standard for everybody to have that sort of familiarity. So I'd like to introduce Milady Garcia, who's going to help me co-host this webinar today. Milady?
Thank you, Amy. I hope everyone had a great weekend. Happy Monday, and thank you for joining us for this webinar this Monday afternoon. As Amy mentioned, I am Milady Garcia, and I am the Special Populations Program Supervisor for FEPPP. I was born and raised in the Dominican Republic. I emigrated to the United States at the age of 10 and lived in the state of New York, in the city actually, up to October of 2022, when I moved to Olympia, the great section of Washington, Olympia. I love Western Washington. I'm enjoying my Washington experience tremendously. I love the nature out here. Could do with a little bit less rain, let's be honest. I think all of us could. And my background is in early childhood special education, early childhood general education, and Spanish literature with a focus in Latin American studies. And I worked prior to working for FEPPP as an interpreter and translator, supporting underserved communities, supporting different social service organizations and agencies and nonprofits, kind of as that communication bridge. And of course, my primary language is Spanish. My background with banking is a little different. It's almost like the entire opposite of Amy, because I'm actually the first person to become banked in America for my family. I actually have many of my family members before emigrating to the United States had bank accounts in the Dominican Republic, but once we emigrated, they were like, no, I don't know, I don't trust it, and they had a lot of feelings about it. The whole reason why I became banked was, one, because I was getting a lot of scholarships for college, and I needed somewhere to deposit that money where they weren't going to take 5% of it. And also because my work study checks were coming in, and I realized quickly that I had access to low barrier accounts where I wasn't going to be charged a monthly fee for having an account with a financial institution, and it just made good financial sense. But I had to be the courageous one in my family to take that step, and that's kind of what I did. Now you know a little bit more about me, and I am so happy to be here with you today and share some insights on some of the barriers that our special population students face.
Fantastic. And Milady will be coming in with some more of that information in just a moment. We are also joined today by two special guest speakers. Thank you so much for being here, and welcome to TK Tran, who is a financial education specialist from Express Credit Union, and Jennifer Quiros, from the Executive Director of the Financial Empowerment Network in Washington. And we are looking forward to presentations from both of these guest speakers, and they'll have a chance to introduce themselves to you in just a little bit later in the presentation. But to start us off with our welcome activity, I read the feedback. In case you haven't noticed, we read that feedback, folks, and the Kahoot, she was popular. So we are going to do one more Kahoot here on getting banked. So I'm going to go ahead. I fixed the problem. If you were with me the last time, we tapped a certain number. I should have fixed that issue. So I'm hoping that, let's see, are we seeing the Kahoot at this point?
We can see it, Amy.
So we're waiting for folks, if you wouldn't mind jumping in here to have some fun, answer some questions, answer some definitions. We also have a couple polling questions to kind of get some opinions and get a few word association with banks for the folks that are in here today. Awesome. Thank you so much, everybody who is joining. We'll give just a few more minutes to get logged in. And you will notice, I'm going to say this, coming through, if we start going through, I'm using the term bank the most often. We are going to hear from our friends of Express Credit Union. And we're going to be talking a little bit about the difference between banks and credit unions. So just know that some of the terminology is pretty, we're putting it in there mindfully and specifically, because we recognize that the relationships with banks can be different with credit unions depending on your. I love it. We have 20 people. let's go ahead and get going. That's more than half of you. If you want to jump in at any point, you should have the game pin available up here in the tab. So let's start with the first one is just a poll. There are no points for this, okay? We're gonna put 4 words up here. Which one do you most strongly associate with the word bank? And of course, like there's no wrong answer here. I'm actually gonna mute the Kahoot. Oh, nice. We have safety coming through for most people. All right. I put that as like the correct answer because I had to. There's no right or wrong answer. And no points on that one. It was just a polling question. And now one more kind of polling question. True or false? Have you had more positive experiences than negative experiences in a bank? So if you were to think about your own lived experience, have you had more positives than negatives when you walk through the doors of financial institutions? And most of us have, so that's fantastic. But it's great for us to know as presenters what experiences I would say our students, but you guys are coming from. Okay, so now let's get into some point stuff because I know, educational professionals are a little competitive. What does it mean to be unbanked? And I gave you 20 seconds because we have some definitions here. Having either a checking or savings account, having neither a checking nor savings account, being philosophically opposed to financial institutions, or exclusively using credit unions for financial purposes. All right, and the majority of us got this one correct. Having neither a checking nor a savings account would be our working definition of unbanked. And Miss C2U is up there with Bruce right on the trail. What is the number one reason people will identify for being unbanked or underbanked? Is it lack of sufficient funds, the number one reason? Would that be true or false? Sorry, I said that a little mixed upedly, but I think you guys are picking up what I'm putting down. Okay, this is actually true. Of the top 3 identified reasons why people are unbanked or underbanked, it is because of that lack of sufficient funds. Okay, and we're going to get into a few more details on that. We'll shake up on the leaderboard. True or false? Okay, the minimum balance requirement to have monthly service fees waived, just the service fees, we look across the country, is that average $350? Correct, you guys, I kind of queued it up there. That is false. All right. The average monthly service fee is $5, a little bit over $5 a month, and you would need $470 in your bank account every month in order to avoid that fee on average. Okay, that is the lowest, by the way, since 2010. Having $470 in your bank account is the lowest amount you've needed in a while. This is C2U holding strong. Okay, what else do we have here? What is the average fee for non-sufficient funds? So not having enough in the account to cover a purchase. What are we looking at? $10, $15, $20, or $25? And yes, those are the options, right? It can be a shockingly high amount. See what we have here. All right, it is right now around $20. Most people thought it was the highest option at $25. They are slowly trending downwards. Although 91% of accounts still take overdraft fees and 70% of accounts still take non-sufficient fund fees. Oh, Ian, boom, coming into the number 1 spot. All right, so then of these overdraft and non-sufficient funds, how much did banks earn in Q4 of 2022 off of just these 2 types of fees? Right? Obviously, all of our answers are in the billions, ranging from 1.6 to 5.2 billion. Our source here is the Consumer Finance Protection Bureau. Interesting. Okay, so maybe this is a little encouraging. The correct answer is the lowest amount, 1.6 billion. This is a 50% decrease since 2019. Okay, so we all know what was happening in 2019, right? A lot of financial turmoil happening. And one of the reflections, one of the things that has come from that is people decreasing, or banks and financial institutions decreasing these overdraft and NSF fees, although 1.6 billion is still just so much. All right. What about the average fee for using an out-of-network ATM? These drive me crazy. I will always call, although I will tell you that I had better luck with a large bank getting these types of fees reversed than I do with my smaller credit union now. But these, I would like plan my errands to avoid having to get these out-of-network fees that drive me crazy. It is, guys, $4.73 is the average out-of-network ATM fee, just under $5 at this point. And I don't see anybody who picked it hopefully thinking it was too high, but unfortunately, that's the truth. So some of the fees that our unbanked and underbanked peers and students are dealing with. Last, true or false, interest-bearing checking accounts often charge higher fees than non-interest earning accounts. What do we think? Which costs us more, to earn interest or to not earn interest? And awesome. So about 14 of us got this one correct. Interest-bearing accounts charge higher fees, which is another reason why it can be a challenge to be unbanked or underbanked. Now all of a sudden you're cut off from the interest earning ability as well to like your money passively grow for you. Look at this. Ian, Mrs. C2U, and RB in our top three. Let's see if they can hold strong on the last question. What's the most popular type of payment with consumers? We're talking about being banked. What type of access are people using the most often? Cash, credit, debit, or payment apps? And this is, countrywide average too, to think about. So which of these services essentially are or underbanked friends living without? A lot of the time it is, well, debit card is still the most popular way to pay. Payment apps is definitely trending upwards, but they haven't even come close to replacing the debit card yet, whether that's a tap to pay or still the actual sliding part. All right, we have a podium. Congratulations. Oh, JQ came in. Mike coming in second place. And number one, I'm actually excited. Who is this? Oh, Mrs. C2, you coming back in and stealing that first spot. Congratulations. Not stealing it, you earned that. Thank you so much to everyone for playing that welcome activity with us. And if Ms. C2U could send me a private message so I can make sure we get you a door prize for your participation, that would be amazing. Thank you. All right, let's get back to our presentation. And Milady, if you could make sure that I'm in the right spot here.
Yes.
Awesome. Okay, so up to this point, we have talked about trauma informed lens when we've talked about financial education, wanting to make sure that we view this important topic through the lens of recognizing that we want to keep the student's whole lived experience in mind. And so for today, we are doing something, just a slight twist on that approach. So today we're going to be talking about our special populations students, who we know that trauma can be epigenetic, can be inherited through our DNA, it can be ongoing, or it can be a single incident experience like some on the list that you see here. For example, a caregiver losing a job. But when these traumas, these experiences are layered on top of the experiences our special population students experience, which could be food insecurity or housing insecurity or continually moving and have no fixed address, then we're looking at students who are inherently experiencing trauma by being a member of our special populations student demographics. And so we just want to spend some time talking specifically about this group, about the challenges that they face, and with a friendly reminder that some of the external effects of financial trauma could be not having a bank account, right? But those internal effects, that difficulty planning for the future, feeling unsafe in conversations about money or having those mistrust, those are learned experiences that can be compounded by the life experience of our special population students. And so throughout this whole webinar, we're really just going to look at the trauma-informed approach is connecting them with financial institutions and trying to create a safe space to do that. So with that, I'm going to turn it over to Milady to talk about Washington special population students. Milady?
Thank you, Amy. So yes, we've been dedicating space to understanding some of the barriers that our special population students face. Usually when I present on our special population students and share the data, I focus on the academic barriers that they face to access high quality, continuous educational resources and educational opportunities. But for this webinar, I want to focus also on the fact that our special population students are not only facing barriers to access education and educational resources, they're also facing barriers to access financial opportunities, right? Whether it's employment or having access to financial services and financial institutions, many of their experiences are being significantly impacted by their circumstances. And the vast majority of our special population students are students who are coming from low-income families and low-income communities. I believe for the first time ever in Washington State, since the report card data center, rather, excuse me, started collecting data on student enrollment, we have for the first time 50.1%. So the majority of our students are considered low income. And we know this because 50.1% of our students are qualifying for free or reduced lunch. So that means that they're coming from low income households. And as we will see later on in our webinar, many of them will be impacted by not having access to financial institutions and financial services. Usually when our students are experiencing economic hardship or financial hardship, there's a lack of bandwidth and they're operating on survival mode, right? That means that they're living paycheck to paycheck. Many of them consider, why should I even bother with having a bank account if I'm spending this money as quickly as I get it? Whatever income they're getting or whatever resources they're receiving, the minute they have to pay a bill, they have to pay the mortgage, they have to pay rent. As Amy mentioned, they have to go get food. Whatever their immediate needs are is what they're focusing on, as they should, because that's their reality. So when we're focusing on surviving in the moment, in the present, there's a lack of ability to focus on the future, plan for savings in the future, et cetera. And that's a lot of our banking transactions are made with the future in mind. Well, I have this savings goal. I want to save for this amount. I want to save for this goal. So I'm going to rely on this financial institution to help me meet that goal. When you don't have that much hope for the future and when your reality is kind of bleak because you're under so much financial stress, that's just not something you dedicate so much time to think about. Additionally, there's a lack of bandwidth. If you haven't been banked before, and a lot of people in your community have not or are not banked, you don't want to learn something new. You don't have time or the ability or the energy to learn about what you need to do, collect the documents you need to collect, organize whatever you need to organize in order to become banked, just to share some of the barriers that our students and communities that are experiencing economic hardship are having to contend with. So you're good. When we think about our special population students, I want to hold space for some of our most traumatized students, or students rather, that are having significantly traumatizing experience. When we look at our unhomed student population, we have a very high unhomed student population with 44,000 students experiencing homelessness, and that's up by almost 10,000 students compared to the 2022-2023 academic school year. Our students in foster care are also have a higher likelihood of experiencing homelessness than other students, as 44% of them experience homelessness before the age of 17, and that's up from 37% during the 2022-2023 school year. Migratory students, little known fact, Washington State has the highest migratory student population, second only to California. So we have a significantly large number of migratory students, but our migratory students, just like our unhomed and foster youth, are having extreme economic hardship. Many of them are migratory because they're chasing that income, they're chasing the crops, they're chasing the fields out of need, right? They do it with they want to work and they want to provide for their family, but if they could choose, most of them would probably be stable and have a more stable way of earning an income. Students with one or more parents in the military are also experiencing higher mobility rates, as are our unhomed, foster, and migratory youth. And this comes with a whole host of challenges. So many of our migratory or military students or students from military families may not necessarily be experiencing extreme economic hardship, but they will have some of the difficulties accessing having access rather to bank accounts or financial institutions because of their higher mobility rates. And that brings a whole set of challenges for these four student groups. One of them being that when you move around a lot, you lose stuff. And it's not just a hairbrush here or a shoe there, is your documents. For our unhomed students, that's an extremely difficult challenge. When we look at our foster students and we know that they are usually losing documents at higher rates and getting their identity stolen, actually, at higher rates than other student groups. And sadly, most of them are having their identity stolen by their caregivers. These are students that are already having to contend with exorbitant difficulties and hurdles to succeed in life and be not only financially successful, but successful in other areas. And adding that other difficulty and challenge when you have your identity stolen and you go to open your first line of credit and find out you're denied because you owe $40,000 for a loan that you never took is devastating. Whatever sense of hope you had may evaporate in that moment because you're like, well, I mean, the odds were stacked against me to begin with. Why even try? When we look at our migratory students, again, that high mobility rate that they have, working out in very rural areas, they may be in banking deserts and often are. So having access to financial institutions may be particularly challenging for them as it is for some of our military families. Now, when we look at—
I'm gonna jump in really quick because during the rehearsal, we had this conversation, so I have to ask.
Yes.
I would love to know if anyone in this, when we're talking about English learners, has anyone in here not had an English language learner in their class? That's just my question. I think it's becoming at this point so much more the norm. I can't remember a time I was in the classroom over 10 years where I did not have an English language learner. So it's just my curious mind. If I could pose this question to the audience, I would just love to know if any of you just aren't experiencing that. And if so, like, where are you located?
Thank you, Amy. No, absolutely. So when we look at our recently arrived students and families, we know most of them, the vast majority of them, are going to be English learners. And another piece of data, 92% of our English learners are also low-income students. So they are also having these similar experiences, just on survival mode, focus on meeting their immediate needs and probably none of their wants. In Washington State, we have we have 156,910 students who are English learners. Most of them have Spanish as a primary language. Spanish is the language most spoken in Washington, second only to English. When we look at our refugees and asylees, we have a very large refugee and asylee population of students and enrolled students in our public school system in Washington. I know that as of 2020, because of all the political turmoil and warfare happening in countries such as Afghanistan and the Ukraine, our number of refugees and asylees from those countries exploded, and they're expected to continue to increase. We have this data is coming from the DSHS data center for Washington. And when we look specifically at some of our school districts, we find that in Auburn, for example, we have about 1,710 students or so that have been born in a country other than the United States. And out of those students, a little over 1,000 of them could be refugees and asylees. And they're pretty sure that they are, but because they're under no obligation to specify whether they are refugees or asylees, they cannot say this number specifically, but based on their circumstance, they can surmise that a little over 1,000 students could be refugees or asylees, and that's only in Auburn. So if that's in Auburn, imagine the rest of our school districts. We will have a significantly high number of students that are refugees and asylees. Having that experience, coming from a war-torn country, coming from a country where the financial system and the political system completely collapsed, is traumatizing enough if we're talking about financial trauma, right? Or trauma-informed approaches. Many of the students that we see that are not, and this is feedback I get from other educators as we present in other places, they haven't seen currency. They're young enough where the financial systems in their countries of origins have collapsed and have been collapsed for such a long time that they haven't seen currency. They were bartering for their goods and services. So this is a significant hurdle for them to have to overcome when they're trying to join and understand, first of all, understand our free market economy and then join it, right? So when we have the ability to communicate with our refugees, asylees, and English learners, and this is for our financial institutions, the most important thing and what one of the biggest things to do is make sure that you have someone there that speaks their language, because language is a huge barrier, right? Not only are they having to contend with understanding our financial system, maybe seeing a debit card for the first time, an ATM for the first time. It's a lot of information. I know that most of us picked up on these things and kind of are so familiar because we've been in our economy for such a long time. But for a newcomer that maybe they come from, as I said, countries where the financial systems have collapsed, or they simply come from rural areas and have not had access to financial tools such as an ATM and such. It's a lot of information to learn all at once, and they're already having to learn so much more all at once. Additionally, another significant barrier is the lack of documentation, right? Some of our English learners are not legal residents of the United States. This is not the case for most, but it is for some, and that can create some challenges because you need something, right, to open a financial institution. I know that some of our presenters today are going to talk about low barrier accounts and how they're doing wonderful, incredible work to provide equity in financial services for our underserved communities, and thank you so much for that. But that's just some of the different challenges that our English learners, refugees, and asylees face is language, documents, and just the amount of information that they have to learn in a very short amount of time.
Fantastic. Thank you so much, Milady. So let's talk about some of the specific challenges that our unbanked or underbanked communities and students face. So we talked about being unbanked, those who have neither a checking nor a savings account at any financial institution, right? So we're looking at around 6 million US households, which are unbanked in 2021, which was the FDIC National Survey of the Unbanked and Underbanked Households is what we're using for this, which is 3% of Washington residents. And when you hear 3%, you might think that 3% of anything is just not that big of a deal until you do the math. And 3% is almost 250,000 residents without access to traditional financial services, which is a shocking number, at least to me. Then we have an additional definition of the underbanked, and those who have a checking or savings account, but are also using alternative financial services. And that is really where we come to some of the most important education about this topic, because when you're using these alternative financial services, there's a catch to those. So we're looking at around 14% of US households being underbanked. These households are less likely to have access to a credit card or credit or any of the privileges that credit provides, and are more likely to use online payment services as substitutes for banking. And I put that in here specifically because those of us, specifically those who teach high school students, may be seeing students using Venmo or Cash App as a substitute for a bank account, like thinking that this could be a replacement. And I just really wanted to take this moment, and we're going to talk a little bit more about this next week when we talk about scams and frauds. But just this moment to just recognize that Venmo and Cash App are so unsafe as far as protections and insurance go. We're talking risk management. It is an extremely risky bet to bank all of your money on an app that is only as secure as your phone. Right? So the second you hand that phone over, unlock it, your money is now insecure. So that's just one little nugget I wanted to tuck in there, because we are seeing this at some increase a little bit more. And we're looking at 1.3 million Washingtonians being underbanked. We combine that with the nearly a quarter of a million who are unbanked, and we're looking at 1.5 million of our neighbors, friends, relatives, students, community members who are not experiencing equal access to the same financial services as the rest of us through a variety of reasons. We want to talk about the challenges, and I can say it, one of Milady's favorite things, it is expensive to be broke in this country. It is not cheap to not have a bank account, and we're not avoiding financial fees or penalties by avoiding having a financial account. Not only are there fees on top of fees, cashing the check, prepaid debit cards, right? You have longer waiting periods. The accessibility of funds can be a hit or miss thing. Not to mention time. Like, what is your time worth? What is my time worth when I am, taking 2 seconds to access my mobile app and complete some sort of financial service versus having to drive to a location, stand in line, physically waiting. And just the unpredictability in general of these alternative financial services. You never quite know what is going to cost me money. How much exactly do I have to have on this prepaid card before I start getting a weekly $5, fee? This unpredictability can just add to that general feeling of not being able to plan for the future and kind of dig into that emotional, not emotional resistance, I would just say some sort of obstacles to getting connected with financial institutions. Not to mention the risk of loss or theft, right? So we have this slide here as a reference for everybody. We're not going to go through each of these financial services. Talk about the most common ones, which are your check cashing services, your payday loans, and then your collateral type loans. So your pawn shop or your auto title loans. There are always going to be benefits to these, which is why people use them. And most of the time they're convenient. They're 24-hour access. They're in the neighborhood, employing people who are from your neighborhood, who look like you and speak your language, and in many times seem like the friendliest face available. But this by no means is an exhaustive list. I know, Milady, your family and your mom specifically, you have an interesting story about how your mom financed her first business when she came from the Dominican Republic.
That's right. So it is interesting. So my mom was one of those that decided she wasn't going to become banked, and she was very much operating on survival mode, not just focusing on her bills in America, but also sending money back to the Dominican Republic. And it is very much a comfort thing, right? She wanted to go to where people understood her, came sometimes from the same neighborhood back in the Dominican Republic as she did. So it was very familiar and comforting. So my mom actually bought her first business through I'll call it like an underground financial transaction. Let me clarify. So a very ethical business owner, because I know this sounds kind of shady, I swear it's not. This very ethical business owner suggested to my mom, she was a very good cook. She had been working in the restaurant industry for a while, and she had a great reputation as a very hard worker and very responsible. And this man would lend money to other individuals who he saw could be successful entrepreneurs, of course, at a cost. So he would charge interest on the loan because he is a business man after all. And he loaned my mom $120,000. And let's be honest, yes, my mom is hardworking, but he was assuming a lot of risk here because a lot of restaurants don't make it, especially in New York City where you have so many. Long story short, my mom bought her restaurant. It was successful. She had it for 17 years until she sold it and moved back to the Dominican Republic to live her dream. But I always think back, and I've had this conversation with her where she ended up paying like 12% interest on that loan. And if she had knowledge of financial services or had a good credit history and a good credit score, she probably would have paid a lot less in interest and would have paid that loan off a lot quicker. So it's something that I like to share with others because most of us immigrants have that entrepreneurial spirit, and it's great, but there are easier ways to go about it.
Thank you so much, Milady. The last thing I want to mention on this slide is you may notice that there's buy now, pay later on here. And you may have been thinking to yourself, does buy now, pay later belong on an alternative / predatory financial services? And I am going to tell you why I included it. Because these companies, which include Afterpay, ShopPay, it's built into pretty much every online shopping platform at this point. They market their services to their customers by guaranteeing an increase in what the customer is paying. That is what they guarantee to get the contract. They will guarantee that there will be a higher amount in the cart and that more people will convert their cart or actually check out. And so because that is how they market their services, that is why I am choosing to include them. Their purpose is to get people to spend more money, and they are not concerned with whether or not you can pay it back. The numbers show that some around 18 to 26-year-olds are overdrawing their checking accounts due to these buy now, pay later services. So that's just something to keep in mind. All right, I want to make sure we're moving through here. So we have some interesting information on why people do, reasons they will state that they do not have a bank account. Number one, as we mentioned in the Kahoot, was that there's just not enough money to meet those minimum non-sufficient fund fee, overdraft, minimum requirements, all of those, not feeling like you have the funds for that. Second reason, which I thought would be number one, if I'm being honest, was having that mistrust of financial institutions. Third is avoiding banks for privacy reasons. Now, the thing we really do want to talk about when we talk about mistrust of financial institutions as well is there is a racial disparity among unbanked households. If you just look at the statistics on the left and we're only looking at a certain income requirement, you see that Black and Hispanic households are unbanked at almost 4 times the rate of white households. And this is a trend that continues across all income demographics. Looking at time, I want to make sure that we have enough to go through the standards. So I am going to skip a short video that we have here. If we have time at the end, we'll come in and show part of it. But I will put it in the link in the chat to check out. It outlines redlining and why this had such an impact on, in specific, the Black community and their trust in financial institutions, and gives a good overall state of the and underbanked in America. But as I said, we are going to move past that now just to make sure that we have enough time for our guest presenters. So now is the point where I tell us a little bit about standards. And when I say a little bit, I mean, we're going to do this part quick. So we're going to talk about risk management today. If you've been joining us for the last 6 weeks, we've gone through the top 5, our first 5 competencies on the Jeopardy board of what you wish you had learned in high school, otherwise known as our financial education competencies in Washington. We're going to focus today on that first substandard, which is just looking at common types of risk and basic risk management methods. Okay, so when we jump into this, we are going to start with our foundational knowledge. So a friendly reminder that instead of elementary or K-5 standards, I'm reframing this as foundational knowledge because our language matters and we need to start where our students are. So if we have students who are newly arrived, if we have students who are migratory or highly mobile students and they are in high school, this is where we start, and there's nothing wrong with that. We want foundationally our students to have an understanding of risk, that risk causes harm, and this can happen in many different areas of our life. But when we're talking about financial risk, because money is a known quantity, right? We can actually estimate the losses or the costs of these financial risks as well. So we have some agency here and some empowerment in that we can take action to avoid, or in some ways mitigate, minimize risks that we face financially. So examples of this would be students understanding that a pocket versus a piggy bank versus a bank account, these are three different places I could save, right? There's going to be risks associated with all of them, but maybe one or more of these choices would minimize the amount of risk, right? So obviously a bank account with an actual lock and a door is going to mitigate that risk of that money being stolen or misplaced much better than a pocket. And from there, students can start to identify reasons why we would want to keep our money in a financial institution. Oh, peace of mind, safety. I can't get robbed, or if I am, I'm insured, right? On a social emotional level, we're hoping to helping kids connect this with some self-management, right? They're looking at positive and negative consequences and making evaluative choices before acting, but then also kind of connecting this to some social behavior as well, right? When we are mitigating risk, avoiding or minimizing risk, we can also do this in our interpersonal relationships with conflict as opposed to, if we just take that word and switch it with conflict, we can find ways to avoid or minimize that as well. As the students get older and we have this foundational knowledge set, now we're giving examples of specific ways to mitigate, manage, or avoid risk. And in this standards, we're going to talk about 4 specific strategies, right? We can avoid the risk. We can steer clear of it. We can accept the risk. We can control or reduce the risk, or we can transfer it through insurance. This is a fantastic way, these little scenarios, to integrate personal finance into your day. If you were like me and you were given 15 minutes to teach Cell after lunch, anybody? They didn't actually tell me anything about it either. They just said, hey, by the way, you're teaching Cell for 15 minutes after lunch. This is a great way to introduce this little activity, give kids some scenarios, and have them talk about the risks involved, specifically allowing them to dig into that control or reduction. Can we outline some ways that we can reduce the amount of risk? So for example, right, your mom gives you $50 and a list to stop at the store on the way home from school. Well, avoiding that risk would kind of just be like telling mom no. I don't know how many of us are going to do that, right? I think a lot of kids would accept that risk, think that, I can manage that. I could probably make that a less of a risky situation. But the great conversation would come from digging into steps to reduce the probability or impact of it. Maybe I ask my trusted teacher or the front office lady that I trust to hold on to it. I definitely am not leaving my backpack lying around. I'm going to be much more aware of that, right? So little opportunities to start building in some of these conversations can be really powerful for students who are not having any of these conversations anywhere else. And then guys, that's it. That's literally it. And so this is where I say, for kind of the first time, there's an assumption within these standards. Because at this skill development, this is supposed to be happening right before we release our students into the real world, right? So we're saying, according to these standards, if you're just going by the grade bands, that no high schooler needs to be exposed to the reasons why we keep our money in a financial institution. And I just don't think that's true. This assumes that there's familiarity and trust and access and a common language that kids this age, by the time they're developing skills, will inherently have. And I think that's an assumption that we don't want to make. So I would encourage you to bring this information to your students, even if you think it's something they might not already have, or they might already have. Some of these special population students, we are not going to be able to pick out just visually. So you never know who might be impacted by this information. And with that, I'm so excited to turn it over again. Thank you so much to our guest speakers for being here. So we are going to start with Jennifer Quiros, the Executive Director for the Financial Empowerment Network. So I'm going to go ahead and stop sharing to give Jennifer a chance to jump in. And thank you and welcome, Jennifer.
All right. Thank you so much, Amy. I am going to share my screen, and 4 years into virtual life, I still can't do it without saying it out loud. Okay, and I'm getting the thumbs up that you can see it. Perfect. Hello, everyone. Thanks so much for having me today. My name is Jennifer Quiroz. I use she, her pronouns, and I'm the executive director of the Financial Empowerment Network. I'm super excited to be here with you all. And as always, Amy and Milady have just done an amazing job of sort of doing all the research and laying it all out. I'm like, hey, can I borrow your slideshow for my next presentation? Because all the data is right on point. So I'm here today to share a little bit about the Financial Empowerment Network and our work, and specifically our work in an initiative called Bank on Washington. I'm joined today by my colleague Maya Sayas Flores, who is the Financial Empowerment Network's King County Engagement Manager. Thank you, Maya, for being here with me today. They are going to be dropping links in the chat while I'm talking, so I don't have to try and do that at the same time. So thank you for being here and joining me today. So a little bit about me. I loved your slides to introduce yourselves. I don't have a slide to introduce myself, but I was thinking about it as you all were talking. My background is also not in banking. My background is in nonprofit work and specifically gender-based violence. I worked in domestic violence and sexual assault for nearly 20 years. And I got I sort of started in this work in financial empowerment as a brand new young domestic violence advocate. And I was asked to teach financial education classes. So not unlike what some of you are also being asked to do. And I had no financial background of my own other than my mom's little tips here and there about don't buy groceries on a credit card. And I don't know, just some little tips and tricks like that. But the good news is to be able to teach this information, you don't have to be the expert. We are all learning together, and we're all always learning, and we are all always working on our own financial lives. And so even if you feel like, oh my gosh, I don't have my finances together the way that I want them to be, I'm here to say it's okay. Join the club. But the most important thing is that we're all thinking about this and talking about it. And I'm so excited that students will get this information because I definitely did not get these classes when I was a student and could have definitely benefited from them. So with that, let me tell you a little bit about FEN. So FEN is a nonprofit focused on financial well-being for all Washingtonians. And we do this through partnerships across sectors that support access to safe, effective services and resources. So what does that mean? That means FEN does not provide any direct services. We don't do financial education. We don't do financial coaching, but rather we work with other service providers like all of you. I like to say that we are the financial educators of the financial educators, and our impact ripples out into the communities through providers that we serve. So we have 3 different initiatives. We do this through 3 initiatives: financial empowerment integration, asset building coalition work, and Bank on Washington. And I'm going to talk a little bit more about each of those. So financial empowerment integration is really about supporting anyone who wants to be having these conversations in how to do that well. We are typically working with nonprofit providers, and as FEPPP is typically working with educators, but there is so much overlap in what we're doing. And so one of the things that FEN also does is workshops similar to this webinar series that FEPPP is offering on a range of topics. This is, like, I know, the worst PowerPoint slide ever made because it's got way too many words on it, but I wanted to give folks the idea of some of the workshops that we have offered over the last year. All of them are virtual and they're all recorded and available on our YouTube page, or you can go to our events page and find the links to get the materials and the recordings to those workshops, fenwa.org/events, or that QR code. I will mention that in September, we have our next workshop coming up in partnership with HUD. It is focused on relational coaching. We don't have the link yet because HUD is providing that link. And as a large bureaucratic organization, we're still waiting for that, but we will have that available soon. So if you are interested, check back on our events page. It'll get posted there shortly. We also host a monthly Washington Financial Coaching Network meeting. It's the fourth Wednesday of every month from 2 to 3:30. It's a more informal gathering of folks that are offering financial coaching type services. Though you don't have to be credentialed or have coach in your title, it's really for anyone who is working on financial wellness with their clients or customers or community members. Both our workshops and our financial coaching network are led by a steering committee that helps really inform our work and build all of our events. And the financial coaching network is chaired by folks from JP Morgan Chase and from Workforce Snohomish. We also convene a statewide foreclosure prevention work group that meets the third Wednesday of every month at noon. It is a community of practice mostly made up of housing advocates and civil legal aid providers, though anyone who's interested in reducing foreclosure is welcome. In the last year, we've been doing some really great work around updating resources available regarding foreclosure prevention. You can find many of them on our website, fenwa.org/housing. And for a limited time only, we are offering printed versions of the foreclosure prevention flyer that we have put together. It's currently available in English, Spanish, Russian, and Chinese. It is coming soon in Arabic, Amharic, Korean, Tagalog, and Vietnamese. They've been translated. We've asked community partners to review the translations because in housing, there's many very specific vocabulary words, and we want to make sure that it is accurate, but also really understandable for folks that are reading them in those languages. So the process of translation has taken a while, but those will be coming soon. And this group is co-chaired by folks from the Urban League of Metropolitan Seattle and Northwest Justice Project. In addition, our website is really meant to be a resource for folks that are looking for good financial information. We have a whole host of resources available. As you may know, if you are looking for information on finance and you Google, you will get like literally 1 billion responses on Google. And so our goal is to really narrow it down into reliable sources. So a lot of our information comes from the Consumer Finance Protection Bureau or the Federal Trade Commission or other similar organizations, FDIC. We also have a directory of financial wellness providers across the state. So if you're looking for organizations to partner with, that's a great place to look. And we have a self-service job board. So if you're looking for work in the financial wellness arena, you can check there. Or if you're hiring for someone in the financial wellness arena, you can post a job there as well. I mentioned that we also do asset building coalition work. So we sort of have dual roles in that. First of all, we are the Washington Asset Building Coalition. We provide support and resources to a network of ABCs across the state. What is an ABC, you ask, because it's sort of a weird terminology. It's a local group of providers who gather to promote financial well-being in their community. So many of them are hosted with community action programs or other social service organizations in their community, but it's meant to be a cross-sector group of folks that are meeting regularly and focused on promoting financial education and financial well-being. There are 16 ABCs across the state that serve 17 counties plus Native communities. If you are not connected to an asset building coalition in your community, please check out our website. Many of them have links where you can reach out to the ABCs. If there is not a link there, please reach out to me. I'll drop my email in the chat when I am not talking at the same time. And I'm happy to do an introduction because it's a great place to connect with others in your community that are really thinking about how to do this work well. Our other role at FEN is that we are also the King County Asset Building Coalition, which we call the King County Financial Empowerment Partners Network. We are relaunching this work, and this is some of what Maya is doing for FEN. So we're really excited. We are going to be launching some quarterly meetings that will be happening in partnership with the King County Housing Authority. The next meeting is August 28th, and Maya might have more information than I do. I'm not sure, but more information is coming soon. We are working to update resources on the FEN website so that we have King County specific resources available. We're working on a Bank on Seattle King County initiative. If you are interested in any of this, you can join our steering committee at that QR code right there. Maya would love to chat with you more. Okay, so I want to talk about banking because this is really why we're here today. So, again, great data was shared already today, so helpful. The Financial Empowerment Network, we're the lead organization for both Bank on Washington and Bank on Seattle King County. And so, first of all, what is Bank On? Bank On is a national initiative that was developed to meet the needs of folks who are or underbanked, to get them connected to safe, affordable, and functional accounts. So some of this data has been shared. Amy has talked about how expensive it is to be broke in the United States. It's very true. On average, over a lifetime, someone who is unbanked will spend $40,000 on fees for financial services that many of us will access free of cost. Another data point that I like to share is with the first round of stimulus funds in 2020 that went out to families in March of 2020, and this comes from the Brookings Institute, $66 million of that money went to check cashers. Rather than going into the pockets of the families that needed that money, they didn't have an account to receive a direct deposit. They had to pay check cashing fees. And so really our goal wasn't to fund check cashers $66 million. It was to fund families and individuals that needed that money. But if they don't have access to safe and affordable banking services, that's sort of the byproduct of what happens. So about a decade ago, I would say, the CFE Fund developed a certification that financial institutions can obtain by offering an account that meets a set of national standards. So these standards were developed with consumers in mind, and they're meant to be low barrier. So they offer benefits that people need from accounts, but they also are accessible to folks who may have limited or troubled banking history. So for example, low opening deposit, low or no monthly fees. And one of the big ones is no overdraft charges. So that's really important because that's a big concern for a lot of folks that who have banked and maybe are choosing not to now, the unpredictability of those high overdraft fees. There are over 450 Bank On certified accounts now available across the United States, including 17 here in Washington State. And you can see the list of them on our website. It's bankonwashington.org/accounts for more information. And in a moment, I'll drop, or Maya or I will drop a link in to more information on those national standards as well. So our role at FEN is sort of twofold in terms of Bank on Washington. The first is getting leaders and decision makers engaged to make changes to financial products and services. So we know that banks were set up long before any of us were alive, and their purpose is really to make money. It's for people with money to make and preserve their money. And we know that that means that it excludes a lot of people, and it continues to exclude a lot of people. And so one of the goals of Bank on Washington is to get financial industry leaders to the table to look at how they can make changes to their accounts and products and services so they work better for more people. Our other goal is really connecting community members to those low barrier products and services so that they can actually access them. They know that they exist and they can access them. So that is our charge at Bank on Washington. We have a fantastic steering committee for this group as well, and we have co-chairs from American Financial Solutions, Washington State Employees Credit Union, and Credit Revolution Education Directors. So to this end, we do a lot of convenings. We have a few things coming up on August 20th. We have a virtual session happening from 10 to 11 on building bridges between banks and communities. We'll be talking about how folks can partner with banks and credit unions. It's going to be a great presentation, free and virtual, so feel free to join us. And then we're very excited about our 2024 Bank on Washington Forum, Leading the Way, Embracing Financial Belonging. We will be at the beautiful Black Pearl on the Columbia in Washougal. I saw some folks here from Vancouver, so we will be in your neighborhood. We'll be down there October 24th and 25th. Registration for the forum opens this week. So keep an eye on our events page because that is coming soon. These are the links that I mentioned earlier. Sorry, I rearranged my slides, but they are here. We'll drop them in the chat in just a moment. And there are lots of ways to stay connected with FEN. We have 2 websites, fenwa.org as well as bankonwashington.org. We're on Facebook, we're on LinkedIn, we're on YouTube, or please feel free to reach out and email me. All right, I made it through and I have not looked at the chat,
Amazing.
so I don't know if there are any questions.
There were just a few in there. Maya's doing an amazing job of getting all of the links in for everybody. Thank you so much, Jennifer, for sharing about Financial Empowerment Network, about Bank on Washington, and just ways that our participants, if this is something that is interesting or engaging to you, there are so many more ways to get involved. Obviously, we at FEPPP love having you here, but we are not the only people at the party. And so we really wanted to make sure we talked about some of these other people. And speaking of other people at the party, I'm going to introduce TK Tran again now from Express Credit Union. And Express is just one of the amazing credit unions in our state doing fantastic work, particularly with our vulnerable communities. So in no way do we want you to think that this is any sort of sales pitch for Express Credit Union. Just as a partner organization, they have really leaned into the idea of economic justice for all and financial inclusivity for all. So we're so pleased to have them here to share examples of some of the services they provide and some more concrete ways that we can connect people with banks. So, DK.
Thank you so much for that introduction. Let me start sharing my screen. Can y'all give me a thumbs up just to make sure you're all seeing it? Perfect. Good afternoon, everyone. I am so incredibly happy to be here because I used to be a former educator myself. I was licensed to teach English Lit and biology in Florida. So it's nice to be among my teaching peers again. I no longer teach those. I now teach financial education. Why do I do that? Well, it kills my soul to actually say this, but it's much easier to get a classroom much more interested in money when you tell the people, hey, let's talk about Ralph Waldo Emerson today. You know, mostly it's crickets, but it's like, hey, let's talk about money today. Everybody's suddenly upright and attention. So it's much easier to get the classroom's attention with financial education. And it pains me to say that. But anyways, moving on, I'm super duper excited to be here. Why am I excited to be here? Because as young, naive, freshly graduated college grad, my first ever workplace, with a credit union, and I was super thankful for that. Why? Well, let's move on to the next slide. Because of this. So as you can see, a credit union versus a bank. So let me highlight some key points here for you. A credit union is member owned, whereas a bank is shareholder owned, and a credit union is not for profit, whereas a bank is for profit. What does that mean? That means a bank, they anyone can be a customer. They want you because they want to squeeze money off of you. Whereas credit unions, we're a little more careful. You have to qualify for membership. We try to have like a more personalized one-on-one relationship with our members because we want the best for you. We don't want to squeeze money from you, and that's why all our decisions are made with members in mind. Whereas banks, well, if you're a stockholder of a bank, then you get decisions, but with a credit union, we invite all our members to our yearly conferences, yearly board, and all our members get a say in how our credit union operates because our credit unions are made for the members. And I want to highlight things to the right over here, especially like free checking and with what Amy and Jennifer mentioned. With major banks, there's a big amount, and I was just checking while they were presenting because currently I'm banked with Chase, and my father is banked with Bank of America, your major bank. So I was checking my Chase account, and you need $5,000 in your all Chase products to not be charged a fee, or 1,500 minimum every day of the month to not be charged a fee, or you can get a direct deposit of 500. And maybe for not everyone has direct deposit. Maybe somebody's job doesn't have direct deposit, or maybe you don't want to keep 5,000 around in your bank account because you have better things to do with that money, right? At most credit unions, and especially here at Express, most of our fees are zero, nada. And that's not all. Like when it comes to loan fees, we're able to offer much cheaper fees than other institutions as well. And that's why, like Amy mentioned and Jennifer mentioned, consumer trust for credit unions is at a 62% compared to just 28% for banks. I want to talk to you today about the credit union difference. Let's move on. So what do? We are a not-for-profit, full-service financial institution. And I'll tell you what about full service means in just a bit, but we're basically a bank, but not a bank. We're a financial institution. We're a credit union where we have low fees on rates and on loans, and we are a CDFI, which means we have a community interest at heart. We got that designation, and we receive some support from the government in order to keep that community interest at heart. We're also a low-income designated credit union, affordable and accessible, diverse and inclusive. Everyone is welcome, but this is where I have to put a star, an asterisk on it, because we were featured on USA Today last week. We were featured in like one of the pages on USA Today. So we've been bombarded with applications from all over the United States. So we never made that clear before. Like you can only apply for a membership if you're Washington, you live or work in Washington, which we all do. But we never made that clear before because we were so small and mainly only operating in Washington. So we never expected USA Today to feature us. But now we're bombarded by everyone, so we have to make that more clear. You must live or work in Washington, which thankfully, hopefully, all of you do. We are also cooperative, federally insured by NCUA. I want to highlight this because banks are insured by the FDIC, whereas credit unions are insured by NCUA, but it's the same amounts, so $250,000. So you don't have to worry about your money disappearing for whatever reason. And we're also Juntos Avanzamos Credit Union through Inclusive. Moving on to our next slide. What does that mean? The Express Credit Union. Our vision is economic justice for all. Every person in Washington State is financially resilient and possesses the financial tools they need to pursue their dreams. And we emphasize every person. That means we follow what's called a community teller model, where we meet people where they are physically and financially. Like if you have a computer, you can open an account online with us just fine. That's cool. Phone, that's cool. If you got a car and you're able to drive to our single branch in Soto, you're also, okay. Did you have a question, Susan?
Oh, sorry about that. Just letting people know to be mindful and aware if you have unmuted. Go ahead, TK.
Okay. Anyways, if you have a car, you're definitely welcome to come down to our branch in Soto in Seattle. But even if you don't have those methods, we are able to meet you where you're at different community events to even open accounts for you where you are at. And I'll tell you more about that in just a bit. So accounts for the unbanked and underbanked. We are a full service financial institution, but we're so much more than that. What do I mean? This, specialized accounts that other financial institutions maybe are unable to work with, like second chance accounts, people who've been denied bank accounts for whatever reason in the past. Like maybe you were justice involved, maybe you were young and dumb like I was. Whatever the reason that you have been denied bank accounts, we are able to open accounts even when you have negative banking history to get you back into the banking system with no monthly fees or minimum balance account requirements. Most banks, when you apply for an account, they will try to put you through an automated checking system, whereas we put that personal touch on there. We love to meet our applicants one-on-one because we're small. Well, we used to have time until recently, we used to have time to meet people and hear their story. And even if you have negative banking history, we can open accounts for you. ITIN bank accounts for people who have without social security numbers, but wanting to get their paperwork in order to live in the States. Or even if you don't have social security numbers, we are able to open transitions accounts for people who create ITIN for the first time as they're waiting to receive an ITIN number. We can still get a bank account for you. And this one I think is most appropriate for teachers here, full unrestricted accounts for minors 15 and above without an adult joint owner for any minors like 15 and above with a Washington ID who, for whatever reason, might or might not have an adult in their lives that they can trust. Moving on, we are diverse and inclusive. 64% of our members are considered low income. Over 65 come from racially diverse backgrounds. All our frontline staff are bilingual in Spanish and English. I myself am bilingual in, well, trilingual actually, English, Japanese, and Vietnamese. And we believe having a branch where everyone feels welcome and at home. So this is a lot of writing. You don't have to read all of it. It's just some basic accounts, but I want to highlight things like this, our savings accounts, our business savings accounts, our kids saving accounts, checking accounts, business checking accounts, kids checking accounts. We are a full service financial institution that are able to offer so many of this exact same products that, Bank of America or Chase is able to offer. And our accounts are, to become a member, all you need is $5, some kind of valid identification. And on average, credit union members save up to $200 a year just for having an account there rather than a bank. But let me tell you a secret. In many cases, we're able to just even fund that $5 for you. When we're at an event, when you're opening online, we're able just to give you that $5 to even help you meet that minimum threshold. So no minimum balance required, just $5. We can fund it for you. No monthly maintenance fees. Most banks charge you just for having an account with them. Like Chase charges me $12 for a checking account and $8 for savings. If I don't have those minimum balances, whereas we charge nothing. No Social Security, no problem. All our accounts are loan accessible using an ITIN. And even if you don't have an ITIN, no problem as well, because we're certified acceptance agents with the IRS and are able to help people apply for an ITIN. So we're a one-stop shop. You can come in without an ITIN, apply for it, and open a bank account, all just with us in our branch. Unfortunately, and this is the giant asterisk, you must live or work in Washington State in order to qualify for account, but hopefully that's not a problem with people here. And we believe in 100% transparency and openness. We invite our members to, well, everything, including board meetings, and our members get a say. And all our frontline staff are bilingual, Spanish and English, and our shared branching network locations nationwide, because I want to highlight that. Because one of the weakness with credit unions, people are like, oh, Bank of America's in every corner. And they kind of are, they are in every single corner. Whereas credit unions are maybe not in every corner, but credit unions come together, work together to really to help that weakness. So what that means is Express Credit Union partners with many other credit unions like BECU or Seattle Credit Union to offer shared branching network where we might only have one branch, but you can access your account from anywhere nationwide at partner credit unions and at participating stores like 7-Elevens. So even though we're not at every corner, we try to be at most corners. Moving on. Here's how we help our members is with affordable loans, because signature loans, we have competitive rates if you have good credit scores. Our signature loans start 8.74 APR. However, we specialize in products for members maybe without good credit, like this member advance loans, which is our way of saying our payday alternative loans. Our fees is a flat 10% fee for 90 days versus an average of 391% APR for payday loans. And auto title loans. Let's say you have an old car that you want to put up as collateral to get a loan for whatever your need is. Maybe it's rent, maybe it's something else. We're able to offer you around 18% APR for your auto title loan versus an average of 300% APR for car title loans. So that's how we help our members. Zero fees, but also affordable, non-predatory loans. Besides that, we have special products for different kind of members, like credit builder loans, to help you rebuild your credit score. Let's say you want $1,000, we put $1,000 into an account and you can't access it, but you pay every month. And when you've reached that 1,000, you can withdraw that $1,000. But for every month you've paid, we've reported to credit bureau. So you're slowly building your credit score month after month. So that's credit builder loans, suspended license loans. If your license got suspended, because we know that members need their license to drive to work. DACA citizenship permanent residency loans, because man, filing fees with like the USCIS can be expensive, like thousands of dollars. But that's not all. That's not all we do for members, because our members' interests are like, that's what we do. It's the heart of everything we do. So we're all about like members' financial wellness. We offer free workshops and webinars for members and covering a variety of topics that members told us they want, like building credit, accessing affordable loans, investing, budget savings. But more importantly, all members can access free one-on-one financial counseling with certified counselors, including myself, here at Express Credit Union. Like whether you want to talk about building credit if you're new to like America, or you want to talk about savings, or if you're a high net worth member and want to talk about future planning, we can do that as well. But there are a few things we can't do. For example, like if you need to talk to collectors, or if you need to forestall foreclosures, or things for more complex things, we refer to Green Path financial coaches who can handle things like that, like negotiating with creditors for debt settlement. But that's also free for our members. Like everything, our financial wellness of our members, everything we do that's at the heart of everything we do for our members. So community pop-ups, events around Washington. So you'll see me and my colleagues at random places around Washington, around King, Pierce, and Snohomish counties, where we can open bank accounts to wherever there's a community need, as well as provide resource and education, help individuals understand and manage their finances better. We've partnered with these schools in the past. If you don't see your school, that's okay. Feel free to reach out for me, and maybe one day your school can be up here as well. My information, Amy will send out a separate thing at the end with my contact information, but there's also that, and you'll see that at the end. But coming back, so how we've succeeded with our initiatives around the community is we have really strong community partnerships, both with Jennifer and the Fin Network, but like most of our referrals come from community partners who refer people to us because they believe, they know that we're like a safe institution for the unbanked and the underbanked. And we offer like the affordable loans and products that I just mentioned to you. We conduct regular members research studies that gauge what kind of support members need, and from that support, we design our workshops around that, our financial counseling around that, in order to be able to better support our members. And ITIN, we've helped community members complete ITIN applications and provided loans to ITIN members, demonstrating our commitment to serving diverse populations. In 2024, we assisted 280 people with ITIN applications. And we work with special like community organizations like Catholic Community Services to offer unique loan products designed just for the employees. Many who wouldn't qualify to access mainstream financial services, we offer that to them in order so that their employees can start building their credit and start building and achieve a better financial future. So everything we do here at Express Credit Union is geared towards our members, from offering different like ways to open accounts to affordable loans, as well as one-on-one and like a workshop financial counseling for our members to improve their financial well-being. So thank you, everybody. That is my presentation. Feel free to get in touch with me if you need to.
That is fantastic. And TK, can I just say, we would all be so lucky to have our financial institution be so passionate about our financial wellness. I just love the passion that you talk about this work with. I appreciate it. Thank you, and Jennifer, both of you, for everything you do to advance financial wellness in our state, because it is such an important topic, and it's just, it's wonderful. So I'm going to come back over as we wrap up here today. Milady, am I good? Oh, and then I lost my video panel, so I can't even see if you're giving me.
You're good. You're good.
There we go. Thank you so much. Okay, so as we are summing up today, we have some time. We're going to get to questions in just a moment. I just want to remind us all, like, what are some of the components of a trauma-informed approach, right? And we heard so much today about this top right circle, building relationships and connectedness. Like, how many of us knew that there were institutions out there that care this much about building up both communities, the economy of our state, like people's financial futures, everything. It's inspiring. And so to that end, I'm doing something a little different, which I haven't really done with this group at the end of our webinars before. I'm issuing a call to action, a challenge to all of the participants who are here today, particularly those who have been with us over several weeks. Your call to action is to connect your students with either a financial institution, a financial provider, somebody in this space. Invite someone, access those provider directories or those asset building coalitions that Jennifer shared in those links. Reach out to somebody in your community. Even better, best, if we can find someone who reflects your student and your specific student population back at them. But let's start breaking down some of these walls and some of these preconceived notions. And I hope you'll take up this challenge to bring someone in to commit during the 24-25 school year that at some point you're going to bring in somebody from a financial institution or a financial provider to answer questions and connect your students with some of these services that they might not even know exist out there for them. So that is my call to action to you, and I hope that you will take it up. As we are moving forward, we have time at the end here for some questions, and I do have one question, TK, that was brought up during your presentation. And it was specifically during the time you were talking about your the accounts that you offered to minors 15 or older, I believe you said. So what types of identification would a student need to open that account?
Yeah, any state ID, any government issued ID would work, whether it be a driver's license, passport, or any other government issued ID, we can work with that. And anyone 15 or above can open a regular account, not restricted at all.
Which is so fantastic. As we heard from a lady, we have a high number of students who are already income earners in high school. I mean, besides just the students who are working part-time, but students who are perhaps our migratory students who are doing like full-time employment as well. And then the second follow-up question there, TK, is a school issued ID card considered government issue?
I believe, yes, that I have to confirm with. So please feel free to get in touch with me, tk.tran@expresscu.org. But I believe, yes.
Fantastic. So, and that brings me back as well to if you have students who are involved in the foster system, we did also have a great resource from the Annie Casey Foundation about credit, credit reports, what those students are, what their rights are related to getting their credit report, the kind of combining that with some of the credit building financial products that TK was talking about might be a fantastic resource to provide for some of those students as well. And then we had another question, who else, what other institutions out there allow 16-year-olds to open up an account? So Jennifer had mentioned she knows Washington State Employee Credit Union, Seattle Credit Union, and WaFd Bank all do, but there may be others. So thank you so much for that information as well. As we know, I know Milady kind of mentioned it, but unfortunately, you know, our students that don't have strong support at home are often the students who need the most support at school. They're not picking up some of this information through osmosis, I guess, as it's sort of assumed that we all do. And so being able to just bookmarking some of these and having these resources in your back pocket, just in case one of these kids comes through your door, can be so powerful and impactful for them. But I think just for the average student as well, and if anyone has any other questions or anything they'd like to address, please make sure you throw that into the chat. But just for the average student as well, for us, the average person, like we deserve to get the most out of our financial institutions as well, right? We are all, everybody works hard for all of our money, and we deserve to have the least amount of it go to fees, fines, and you know, predatory financial practices. So as we head towards wrapping it up here, we're heading into 5:29, and you guys know I like to end on time because I always want to respect everyone's time, but particularly educators' time. I just want to say thank you so much for being here today. I hope you feel confident in talking or at least recognizing some of the issues that are facing our unbanked and underbanked students and communities. You have heard some of the research and the reasons why it's so important that we talk about this important topic. And you have access now to links from Financial Empowerment Network, talking about that provider directory, the Asset Building Coalition, other workshops or opportunities to get involved if this is something you're passionate about. And then again, thank you to TK for just highlighting Express, the incredible work you're doing across the state and how you're prioritizing the underserved. I think if we look hard enough, we find enough like-minded people across the state who are doing this work. We're out there. So now it's just about connecting us all together. So with that being said, thank you so much for everything. TK and Jennifer, Milady, thank you so much for your contributions and being willing to share your time. And thank you everyone for being here. If you have anything else you'd like to chat with us about, we'll stick around for a couple minutes. But as of now, I'm going to go ahead and stop the recording and say thank you so much for making time to be here with us. Next week, we're going to talk about scams, frauds, and identity theft related to students and for our young people, our younger generations, and also what should you know as consumers out there. So hopefully we'll see you next week as well. Thank you.